Yo, what's going on, guys? So today we are back and we are going to be going over a bread and butter type setup, something that you can rely on when the market's choppy or even when if it's got directions. It gives you a stop loss, gives you a profit target, gives you an entry, all based off the Fibonacci retracement. As you guys can see here, we're going to go through it. I'm going to explain the terminology. Swing high, swing low, high day, lower day, stuff like that, the open to the close. And then we're going to go to Thinkorswim. As you guys can see, today's Friday the 8th. And we're going to go in, we're going to apply it and see how they work out. I've done a lot of back testing with this. It turns out to be about a 63% win rate. But with that being said, the risk to reward is 2 to 1 or greater. So if you strictly trade this setup, it's going to make you a profitable trader. And then I'll go over the probabilities from, the 50 back to the 23. That's all sounding like crazy stuff right now, but we'll get it locked in. So without further ado, let's get into the presentation. I want to say this right now, I'm not a financial advisor, nor do I seek to be. This is for educational use only. So do your own back testing and do your own due diligence. But let's get into it. So this is the bread and butter. The things that I use are the opening range and the fibs. That's the two most important. And then for opening drives plays, we use the anchored VWAP. The anchored VWAP part is a little complex, so we might not go over that today, but I will show you guys one example. So let's get into it. So understanding the terminology. You have multiple terminologies, and the cool thing about the fibs is you can use them however you want to. I'm going to show you how I use them intraday, and what I look for. I can use them for dips, potential profit targets, and so on. So we have the open, the close, the swing high, the swing low, opening range, what is the actual Fibonacci retracement, anchored VWAP, which I used from the previous day, which I learned from Bryant, lit trading, high of day and low of day. You guys know some of the basics, but we're going to go through it real quick. And yeah. So the open and the close. The open is also known as the opening price. It is where a certain security opens at market open. So 9:30 Eastern, 6:30 Pacific, 7:30 Central is where the price opens. The open is the first transaction which a stock is purchased at. So you guys know when a stock is being bought or sold, there has to be a buyer and a seller. And then a market maker is like the negotiator or the person who makes it happen. The close is also known as the closing price, which is 4 p.m. Eastern, 3 p.m. Central, and 1 p.m. Pacific time. And that's with securities, anything. As you guys know, stocks trade towards after hours. I don't use this at all after hours. I'll use it pre-market, we'll go through. But yeah. So now we're sitting here and we're wondering, what's the swing high to the swing low? The swing high is termed using it's a technical analysis viewing the stock. Think of the swing high as the peak, or sometimes it can be looked as the high of day or the top. But with the swing high, it doesn't have to mean high of day, because you can go back to the 20-day 1 hour. You can do stuff like that, and you can find fibs on larger time frames, so it doesn't have to be. Now the swing low, you can think of as low of day, or the base or the bottom, but it doesn't have to be the low of day. So the nice thing about the fibs is that you're going to be able to customize it to what fits your trading style. So if you're a swing trader, you'll use larger time frames. If you're intraday, you'll probably use the 5 or 15 minute. I use the opening range, so the first 15 minutes is what I base it off of. So yeah, let's continue. So the opening range, this is the key to my trading style. And what I mean by that is you have the opening range, which is the first 15 minutes of the market open. As you guys can see here on AMD, so I have the 3 minute pulled up. I'll just go to the 15 minutes so it makes it more sense. I trade off the 5 and the 15. So this one candle right here represents 15 minutes. This is where the opening price, the closing price, the high, where my cursor is 96.4, and the low. The opening range, as you guys can see right here, this blue script is the opening range. So we see that AMD is trending down, obviously. So this will be the top of the opening range, 96.4, and 94.55 will be the bottom. The opening range is the first 15 minutes of market open. You do this by using the high and the low of the first 15 minutes, or whatever way the stock's trending. Facts about the opening range. It occurs between 9:30 Eastern and 9:45. Typically has the most volume in the day, and is typically the most uncertain. That's why its opening range is the same thing to me as opening drive, and it has a lot of volatility, meaning more volatility, more opportunity, more responsibility. I will put in the Discord the script that I use for the opening range. I learned it from Tommy the Bull, and and on top of this, this example with AMD, see we have a 9 EMA crossover to the downside too, so that's even more perfect. So this is what I just explained. Right here is an example on Citibank of an opening range on a TOS chart. So the low happened to be the open for Citibank. The high was the 15. As you guys can see, the top or bottom of opening range, that retest typically acts as support. And that's why it's it works really well with the Fibonacci's. If I sound under the weather, I still am, unfortunately. I'll try to get better, I promise you guys. But soon, I'll be more active in the Discord as well. So obviously, what is the Fibonacci retracement? All you really have to focus on is the 50%, okay? And you have to focus on the 50 because you view it as half off. Half off anything is typically a good deal, right? And the 50 is going to be our entry point. The 61.8, which we'll go over later, is the stop loss. Soft 23 is the profit target. Then we have fib extensions, which I also learned from Bryant. We'll utilize that. So the fib levels are a great buy, but they do not replace price action. So obviously, price action is key. The ideal setup is either off the 50 with the EMA 9 or 21, or a key level, or the anchored VWAP or something like that. So this is just a way to incorporate the fibs into your trading style and give you even a little bit, like a 5%, 10% better edge on your trading. The Fibonacci retracement is a tool to assist with technical analysis, more specifically levels of support and resistance. So it is based off price action over time. Anchored VWAP. VWAP is the volume weighted average by price. The anchored VWAP is an indicator that shows volume weighted average by price, but from a certain point. So what I'll show you guys in the example that you'll see here is I use it. I learned this from Bryant Trading Lit. Is I take it from the day before, I run it through pre-market, and then I use the opening range strategy, which I adapted on my own. So I took his kind of style and made it my own, and it's what's worked the best for me. I know a lot of people use it off pre-market data and stuff like that, but this is what works for me. Then the anchored VWAP acts as support or resistance in an area of confluence. So what I mean by that is there's been a lot of times, like even with AMD today, where a point from the all-time high, I'm thinking, bullish. We break 96 right off the open. I'm supposed to be in calls. Anchored VWAP sometimes might tell me, anchored VWAP might be at 97, and you're like, well, that means there's a bunch of resistance overhead, so it helps me with the opening drive plays. So we're going to get down to the strategy. The strategy is the regular technical analysis, so that means charting, weekly, daily, 4-hour, and 20-day 1 hour. Then we're going to incorporate the anchored VWAP, the Fibonacci retracements, and buying the 50. When I say the 50, I mean the 50% retracement. So step 1, charting, indicators, and back testing. So obviously, for all you guys that are new to trading, or you've done it a while, you know how to chart. But basically, we want to start from the top and work our way down. So larger time frames, I don't ever go to the monthly. I typically stick to the weekly, but I go weekly, daily, 4-hour, 20-day 1 hour, and that's it. If it's a freshly traded stock, like a brand new IPO, you might want to go to the 10-day 30 or the 5-15, but for the most part, I only stick to the 20-day 1 hour. Set up the indicators. So let's go here. I have this whole, this is my entire script. As I told you guys, this is the opening range. Script, this is my volume profile. And then I have the 9 and 21 EMAs. And then this is another volume profile script. So that's the indicators I use. I know a lot of people use TTM Squeeze, TTM Scalper, and stuff along those lines, but this is my whole daily, what I use to trade. I like to keep it pretty simple. Yeah. So then looking into your Fibonacci retracement settings and then start back testing. So let's first hop onto a chart that was a while back. It was Citibank. I charted it when I did all this. I showed you guys how to apply it and everything. So let's get right into it. So right here we have Citibank. This is during the middle of December, end of December. We start on the weekly time frame, and as you guys can see, I have a level at 83.11, which is the all-time high. 75. I got that 62 level that just broke out. I hope you guys caught the banks this week. EMA crossover on the weekly. That's all I really have on the weekly time frame, right? So then we're going to go to the daily, and obviously I find more levels. I see here, right here where my cursor is, it taps 65, so I put a level there. That 62.50 has been a huge level. It broke out this week. Let's see here. I got 60, 59.5, 55, and then obviously my EMAs and the all-time highs. Now we're going to go to the 20-day 1 hour. Like I said, that 63 level finally broke. And as you guys can see, on the larger time frames, your charts are always going to look messy. But when you can always readjust them on the 20-day 1 hour. I have different colors for different time frames. I highly recommend people do that. And yeah, so this is how I charted up Citibank. So here we have my scripts. What I use for the opening drive, the opening range, volume, the 921, and then this is the anchored VWAP that I got from Bryant, lit trading through a class I took through Tommy the Bull. This is how the fibs are set up. Now you're probably wondering, why is there a negative coefficient? The negative coefficient is there because it gives us the price targets. I got rid of like the 31s, all that, because all I really care about is the 50, and I care about 1, which is the base. I care about the 61.8, which is the stop loss. I care about the 50, because that's my entry. The 23.6 is the soft PT, and then if we really start to rally like what you would see on Tesla this last week, those negative coefficients are the profit targets, are the swing highs. And where we're really looking to, look for a possible reversal. So right here is a great example of Citibank, right? So this blue line, when you are trading in the morning, it will not show up until the opening range is done. So the first 15 minutes. When you have this script installed, it does it over and over and over. 8:45 Central, 9:45 Pacific or Eastern, 6:45 Pacific. Boom, it shows up. So as you guys can see, the yellow line is my anchored VWAP, and the blue line is my opening range. So now that we have all the fibs, you guys might want to pause the video, go back to this. Try to set up your fibs this way if you're trying to back test it. It's what works for me. Now that we have the opening range, we can certainly see after the first 15 minutes, where's the stock at? It's at the top of the opening range. And what I mean by that is, if you guys look here, that's the opening range, right? And as you guys can see, we close right above it. We close right at the top. So we are technically bullish. And we are also bullish because anchored VWAP is acting as support. So now we're going to get into applying the fibs. So right here, as you guys can see, I take the base of 1 and I put it all the way to the swing high. So I'm going to give you guys this quick example right here on AMD to the left here. So I don't have the anchored VWAP pulled up, but I would assume that anchored VWAP is acting as support. Big gap up day, so it's got to be around 94-ish. As you guys can see after this, the 15-minute candle. So the first candle is the opening range, 8:45 Central, boom, it pulls up. So all we do is we take the base, or which will be the 1, from the low, or from the swing high, because we're trending downwards, and we apply it to this, the close of the 15. So something that's interesting here is our 50% retracement is 95.50. Our stop would be 95.70, and our soft PT would be 94.9. So what didn't work here is we didn't get the pull to the 50. We got a pull to the 90 MA, so that could have been an early entry for a continued short. But as you guys can see here, when we go out a little more on the 15, is that the PT1 or PT2 was hit. And then we were expecting a bounce at 93.50. We tapped 93.57. So we almost hit that final PT, and that's where you can also look to play reversals. So as we did that right there on AMD, you can see it on something like Citibank, as we did here. And now, as you guys can see on the 15-minute, the swing high to the swing low to the bottom of the opening range, this 94.56 acted as resistance. Look at breakthrough, retest, and then we finally broke through, and we are encountering an EMA crossover. Let's go to see if we can find something else. So right here is a good example. So after the first 15 minutes on BABA, so this candle, the close is here. So we are technically bullish. So we're going to go swing high to swing low. We get the pull to the 50, but the 61.8 does not hold. The 61.8 is your stop loss. So this area right here, this 61.8, that is your stop. That's your stop. So you get stopped out there, right? This is the main importance of, if you trade this and you trade this simply, you're going to be profitable. As you guys can see here, 229.68 is the entry, right? Then we have 228.97 is the entry. So we're risking about 70 cents, okay? We're risking about 70 cents. Now if we play it from 229.68 to the soft PT, right, which is the 23.6, it's 231.27. So that is 229. It's over $1.50. So as you can see, our upside for the soft PT is $1.50, right? And our downside is going to be 70 cents. That's the max we're going to lose if we stick to the 61.8. Now, big conception is I trade off the 5 and the 15 and sometimes the 3. When it approaches the 61.8, you can either A, average down and exit. There's no, oh, I should exit. You exit when it does not hold on the 5-minute. So you can see wicks, you can see all that, but if it does not hold on the 5-minute and closes below, that's the entry point. So we would have took a loss here on BABA. What's interesting though is you aren't going to take a loss later in the day when you apply the fibs, right? You get that high of day breakout here, the negative 23.6 and the 61.8 were hit, right? And if you can look on the 15-minute, it rejected perfectly off this 236.50 level. BABA had a lot of catalysts today. That's why we saw, spike in volume here. But it's a whole system. And what I'm trying to tell you guys is you can really use this to your advantage across the board. So the most common questions are, where's the entry, where's the stop loss, and where's the profit target? Let's go to a random stock here. Let's go to Tesla. Let's see how Tesla would play out. Okay, so as you guys can see here, we can just go over this right now. This is a longer time frame analysis, okay? So right here is Tesla. You guys know. I'm going to delete this for you guys. But you see I have this pulled up before it's even touched 892. before it even broke 850 and stuff like that. I actually tweeted out, 744, 718, stuff like that. That's how I come up with these levels, okay? So this is the example of a swing high to swing low. 695 here on the 20-day 1 hour was the breakout. We never got the retest on a larger time frame. So what I mean by retest is, I talked to Marcus about this, I talked to a lot of people, is we broke out clean to 740. We never retested this area for a continuation up. So we basically, so what I'm saying is we went from here to here real quick without no retest of this 695, 700 level. So that is going to be my base or the swing low. So we're going to go to fibs here. As you guys can see here, it can be anywhere, but the price level is what matters. So I'm going to go here from 695 or 696, and then I'm going to go, let's see, what would have made logical sense here? We can go to this swing high right here. So as you guys can see, all I gave the Fibonacci was from 695 to 812. And you guys are wondering, why did I pick 812? Okay, I didn't. At this time, I wouldn't have all the data. This is something you guys are going to have to toy around with, but it's pretty clear that, it closed at 812, 815-ish yesterday. Let me go here so you guys can further understand. So if I was setting this up last night, we go to the 5-day 15-minute. Where did we close? Okay, we closed at 823. But it happened after hours. So really this was my support. As you guys can see, we gapped up, we retested right here. As you guys can see, this is going to go along with the breakout and retest. We retested the 23.6, held, and continued up to the 61.8. So these fibs have a lot to do with, just in general, what the plan is and stuff like that. So, yeah, let's look at a stock like Lemonade, and we'll get into it. Let me remove these fibs. That's from previous day. So Lemonade making new all-time highs. This is going to be the last example. I'll do a lot more webinars if you guys have questions. I know it's a lot being thrown at you guys, but let's try it. So as you guys can see, Lemonade gapped up. I don't have this charted, but I do have the opening range script, okay? So this is the opening range. You have this doji candle, and you're going to go, this is on the 5-day 15-minute, right? So we select the fibs. Now if we go to the 5-day 5-minute, if you don't notice, we get, look at this here, we get the pull to the 61.8 right here, and then we continue up, and we hit every PT. The 23.6 on a shorter time frame acted as resistance, which that's our soft PT, so that's the most important thing. But all you really need to focus on is this. You need to focus on the 50. So the 50 is our entry, right? The 50% retracement right here is our entry, right? Okay, so now the 61.8 is our stop. 61.8 is the stop loss. Sorry, this is so slow. So let's just look at the risk reward here. Entry is 145.50. Our exit is $1 below. The 23.6 fib is 147, and then as you guys can see, just the upside to downside ratio makes so much sense that if you just do this and trade like an algorithm over and over and over again, you're going to be consistently profitable. Yeah. So let's go over, now that I've done that, let's go over a couple more examples. I'll go over one more example, and then, yeah, let's do it. Let's pick, let's do a larger time frame example here. See how it works on Citibank and so forth. So what I'm telling you is it is used to almost predict certain price action levels. And yeah, that's what you use it for. You can use it as swing trading, intraday, whatever. So swing low to swing high, I'm going to select right here because we did get a retest, as you guys can see, the next 2 days as this bottom wick on 12.3, and I'm going to swing high until further resistance. So as you guys can see here, what I'm talking about here is this is the swing low. Right here is the swing low. Right? And why I picked that is because I just have a lot of experience, and you can learn, you know what I mean, how to incorporate it. Because everyone's swing low, swing high is going to be different. That's the cool thing about the fibs. Now, as you can see here, this is the swing high because we rejected it, right? We rejected 63. Okay? So now, let's move on from that and let's apply the fibs. And you guys are going to say, whoa, this is crazy. So like I said, we're going to apply it from here of 55.39. So all the information that I'm using right now, right, predicted that 68 is going to be the rejection and the final profit target, where people might look to step in short, or where people might look in to take private or to take profit. Now the most important thing is I got all this information from this box right here. I had no idea what was going to pan out here at all, right? And as you guys can see on a larger time frame, 2 days later we got a pull to the 50 with not a close over the 61, right? The 61.8 was never tapped. So hypothetically, the 50 is $59 and your stop would be $58.36, so about $1. To capture 7-8 points to the upside, I mean, you do the math, you're going to be consistently profitable over and over again. When you apply it intraday, it's a little more difficult, but this is just kind of how I use the fibs. I really do. It has stepped up my trading a lot. It's helped me learn when to, hold, especially with a stock like Tesla. And you're playing all-time highs. You have no PTs, and those are the PTs that are set. So that's what I love about the fibs. It gives you a plan. For beginners, it gives you an entry, an exit, profit targets. You can scale out accordingly, to your risk or whatever. This is based off price action. These levels are price action, but make sure you do the top-down approach. This was a lengthy video. I hope it resonates with you guys. I'm sorry if I sound sick. Still am trying to get over it. But we are I'll be posting, this will be like a series, so put in the comments below what you guys want to see next, what I can do better explaining for you guys. And yeah, what a killer week it's been for January, the week of January 8th ending. Tesla, a lot of opportunity. I think I closed the week up. Let's see here. This is the IPOC merger. So disacknowledge that. 795 on this account. So that's about 1.2K on that account and about 1.4K on the other account. So about a 2.6K week for me. Should have been a lot more. I just felt under the weather and didn't really feel like trading. Moved into the house and stuff like that. So yeah, that is the Fibonacci retracement and how I use the fib webinar. If you guys are interested at all, make sure you hop in the Discord. We all talk about our game plans. This is where it's a free Discord. We just drop a lot of knowledge. We do webinars and everything like that, trading journals. So yeah, with that being said, thanks for stopping by. I hope everyone has a good rest of their day, and peace.